guys, it's Ariel
And Jason.
from Fix My Books, and today we are going to dive into a very important topic, which is why do I need bookkeeping for my business? So, we get a lot of questions from people asking, like, why do I need it? Why is it important? And things like that. So, we thought we'd actually make like a comprehensive video of why you actually need it. It's not just, obviously one is government requirements, but other than that, like there are a lot of benefits to having bookkeeping for your business done.
And we may be a little heavy on the government compliance stuff, but because we're doing it because we're seeing more and more that it's becoming an issue for business owners.
Okay, so let's get started. So these are the topics that we are going to be covering for today. So number one is, why do I need bookkeeping for my business? Number two is, what is bookkeeping? So bookkeeping versus accounting. I think a lot of people kind of confuse the two, but there is a difference between those two.
Yeah, everyone kind of gets lumped into the, numbers category. Number three, benefits of bookkeeping. Number four, negative consequences of not having bookkeeping. Now that's an important one because there's money involved in that one. Number five, how to maintain proper bookkeeping.
And last, we're going to add some additional resources down below where, you guys can find this sort of information. Okay, so why do I need bookkeeping for my business? So first things first, bookkeeping is actually the backbone of any business. Some basic things that bookkeeping will provide to you, like basic information, is your sales versus your profits. A lot of people get confused with this. So sales is basically just top line revenue, the amount of money that you take in from your customers, and then profits is actually what's left at the end of the day. We're not going to delve into that, but just know that like bookkeeping really helps with that distinction.
Yeah, the second one is keeps you prepared for your tax. So this is obviously important because you just need to do this. You can't operate a business and decide not to pay any tax or not do any filing because it's just not going to be appropriate if you give some sort of frivolous argument to the government. And also in the United States, if you do give a frivolous argument to the government, you really do open yourself up to an immediate $5,000 penalty. So just don't even bother.
So number three is, it maintains organized records. So this will help you get loans. Some franchise agreements require this sort of thing. So again, this is compliance, not only just with government, but with banks and things like that.
And also for yourself, you should have accurate records because when it comes down to it, garbage in, garbage out, you won't know how much money you're actually making, which, touches on point one. But number four, meet government regulations, sales tax, nexus in the United States, payroll. Now this is something that can be quite serious, especially like things like payroll, because if you're not on top of, and we're going to get into this because it touches on point five as well, but if you're not on top of your payroll, it does open you up to very significant penalties as well.
Yeah. So number five, it helps you make business decisions. So, one thing business owners, I guess, have a hard time with is they look at their profit and loss and they see, okay, there's like 50,000 net profit in there. Why don't I have 50,000 in my bank account? So those are the things that bookkeeping and accounting in general can help explain to you with like a cash flow statement. It can help you with budgeting, etc.
Yeah, and then as well, later on when your business is, either at the end of its growth phase or it's heading into maturity, or things are changing in your life, you may want to sell your business. So bookkeeping is very important for that.
Okay, so this is bookkeeping versus accounting. So what is bookkeeping in the first place? So bookkeeping is the process of tracking and recording a business's financial transactions. So it's more of the day-to-day of a business finance a business's finances. So some common examples of bookkeeping include recording financial transactions, doing bank reconciliations, posting debits and credits to a journal, preparing financial statements, and processing payroll.
Now, you probably understand none of that if you're
Yeah.
a business owner. Just realize that all these things actually need to be done in order to, for a high level overview, they need to be done. Otherwise, your bookkeeping really isn't done.
Yeah. So just think about it this way, like the bookkeeper is who you're going to talk to on a regular basis. You might have an in-house bookkeeper that you talk to day to day, or maybe you have an outsourced bookkeeper like our firm where you speak to us, once a week, once a month, whenever you need to speak to us, and we get the books done for you. So it's really more of like a micro view. Like we know your financials with the transactions, who your employees are, etc. Your accountant will have like a macro view of your financials. They won't really know your employees by name. They're more of like year-end sort of thing.
They won't know who's an hourly employee and who's a salaried employee, that kind of thing. Just on this one as well, bank reconciliations. If you want to check if your bookkeeper's actually doing the correct thing, go into QuickBooks, go into the bank account section, and then check the reconciliation history. If that area is empty, or it says like never been reconciled, or there's no dates, fire that person immediately and find someone else. It doesn't have to be us. We're just telling you, find someone else, because they haven't done anything of
They're
which
supposed to.
that you've been paying them for.
Okay, so bookkeeping versus accounting. So accounting is the umbrella term for all processes related to recording a business's financial transactions, whereas bookkeeping is an integral part of the accounting process. So accounting is more of the process, and bookkeeping is just part of that process.
Yeah, and you're going to understand a lot more from the bookkeeping side of it than you're probably going to understand from the accounting side of it, because the accounting side of it is really to do with financial statements which are going to be reported for tax, or it's something a little more complicated like depreciation or that kind of thing, which from a business owner's perspective, you don't really think about depreciation, because you just paid for the car.
Yeah.
Right.
So again, most accountants are the ones that file the tax returns. Some bookkeepers do this, like us. We file the sales tax return. We do file corporate tax returns as well. But again, like most accountants will handle year-end sort of things, and then the bookkeeper is more of the day-to-day.
Yeah.
Okay, so benefits of bookkeeping.
So number one, accurate financial records. We cannot stress this one enough. As I always say, garbage in, garbage out. If you have bad financial records, then you won't actually know how profitable you are. We've seen businesses where they come in and say, yeah, I've done my bookkeeping, my financial records are up to date. We see their reconciliation history never happened, their profit and loss is a mess. And we actually, after we do the bookkeeping and help some of these people, we find out that literally everything they sell, they create more of a loss on. So they should technically not be even selling anything.
Yeah. So again, this helps with your profit and loss and your balance sheet. It helps you know what your financial position is. And, sadly, we've seen this happen again and again where, we're not the bookkeepers, but we've seen it in other companies where they're going to hire like a high-priced CFO, thinking like, oh yeah, this person's going to help turn my business around or whatever. But the first thing the CFO asks is your bookkeeping done? And they say no. And then the CFO like refers us, because there's no point in hiring a CFO if your books are not done properly. Like
They can't work with
garbage data.
Well, just no information.
Yeah.
That's sometimes some of the case is that people have nothing. Number two, better decision making. So data-driven business decisions based on accurate records. You can't actually make an accurate decision without having accurate records. So again, garbage in, garbage out. And so this will help you when you're coming down to do your planning and budgeting. So, for example, say you have a whole bunch of cash in your business, you're trying to decide whether you should bonus that out to yourself, you're trying to decide whether or not you should pay your employees more, or if you actually need to buy more inventory. A lot of business owners we see, they may run an Amazon business, they'll have a stockpile of cash from the end of December, and what will they do? They'll pay it out to themselves, then realize, oh wait, I have no inventory. I need to put the money back in the business.
Yeah.
And
Or, they took all the money out as payroll and they're like,
Yeah.
whoops, now I have to file my sales tax return. There's no cash to actually pay the sales tax owing. To the
yeah,
government.
so we get people coming to us at the end of the year, just like that situation, and then a bookkeeper will help you have more accurate records so you can better plan and budget what you're doing.
Next is tax preparation and government compliance. Obviously, everyone knows this is what bookkeeping is good for. It simplifies the tax filing process. So if you have a regular good bookkeeper,
One that actually understands the tax code. So if they're
Yeah.
in the US, they understand the IRC. If they're in Canada, they understand the ITA and how things can actually be claimed.
Yeah, so then you're not scrambling at year end trying to finish a year's worth of bookkeeping in like 3 weeks because you need to file your tax return. So this also helps ensure compliance with tax laws, obviously like filing on time. And also a big thing with the US is Nexus, knowing once you hit Nexus and if you have to register for sales tax in that new state. So that's very important because if you're not keeping track of your sales, let's say you're only doing your bookkeeping at year end, you might realize, okay, so now it's January, we're doing the bookkeeping for the whole year of, let's say, 2023, and then you're like, whoops, I hit Nexus for, let's say, Florida in July. You should have registered then,
Yeah.
but your books aren't updated, so you already missed it.
And when you're in a point of non-compliance, things don't get cheaper for you, they actually get a lot more expensive. So it becomes then something called resolution work, tax resolution work, and tax representation work, because those individuals will either need to deal with the CRA or the IRS, so they're going to charge you a premium to file these and keep you in compliance. So some more benefits of bookkeeping: improve cash flow management. So this is what we're saying again about business owners, where they'll have a whole bunch of money and then it goes out, having to pay for something else when they needed to buy inventory. So this really helps you monitor your cash flow.
Next is enhanced business growth. So obviously, if your financials are updated and in order, this helps you in securing loans and investments if you want to bring in, new shareholders or investors in your company. And it can also build trust with your current stakeholders. So some franchise agreements require you, to send them your profit and loss every quarter by a certain date and things like that. So it's just good to be able to meet all those obligations.
Yeah, as well, if you have multiple investors in your corporation, say, 90% of them are silent, they will probably expect you to be sending a P&L or at least something, just an update, a management report as to what's going on once a quarter. The last one, help your business succeed. So 82% of US businesses fail due to cash flow problems. So just like what I described before, it happens all the time. So don't miss tax deadlines, keep on top of your bookkeeping. Just keeping on top of your bookkeeping fixes all of this, and it can be a headache, but if you have a good bookkeeper, where they're very hands-off, you can be very hands-off. You don't really need to do anything except sign stuff, occasionally look at stuff, or
Provide statements.
yeah, just to provide statements or a quick update as to, okay, this transaction was this transaction was for that. Sorry, that was a personal transaction. Something like that. If you're trying to do this yourself on a budget, this may be taking you 5, 10, 15 hours a month. Whereas if you pay someone to deal with it and it's $200, $300, $400, $500, $600, $1,000 a month, you may only need to deal with this 15 minutes every month. So it really does help. And what I want to stress here is, how much do you value your own time? do you want to spend your time doing this grunt work that we do, or do you want to spend your time actually producing money?
Yeah. Also, since you don't miss your tax deadlines, you won't have any penalties and interest. And since, again, you don't miss tax deadlines, you're compliant, there is less risk of audits and slash or reviews because you are compliant. One thing also people don't think about, which we've seen,
Yeah, a couple
sadly,
of times.
is internal fraud. So if there are two people or two or more people who are in partnership together or in business together, even if they're family members,
Yeah.
you know, it does happen where like one person takes money out of the company, kind of disguises it as something else, something like that. So, you know, having like a third party being the one doing the books kind of, I think, is more neutral. Again, we've just seen it before that it's happened.
Yeah, it's best to avoid those situations.
Okay.
So, penalties for improper bookkeeping in Canada. Now, this can be quite extensive. I don't want to go into it too much. So, Section 230, records and books. This is a requirement for maintaining, records and books, at least accurate ones. Every person carrying on a business shall keep records and books of account, including annual inventory. So this is just paraphrasing Section 230. You can check it out yourself. But it is just generally leading on to the next section, which is, so basically Section 230 is you need to do this. Section 238 is this is what happens if you don't do this. So offences and punishment. Penalties for failing to comply, including fines and imprisonment. Every person who fails to comply is guilty of an offence, and in addition to any penalty otherwise provided, is liable. So when it comes to this, you can be hit with quite a few penalties. One of the basic ones is just a fine of $1,000, but this fine can go up to $25,000 for not keeping accurate books and records, and it's to do with Section 230, I think paragraph 1. But also you can go to prison for up to 12 months. So if the CRA do ask for your books and records, make sure you can provide them. So not adhering to that can get you into quite a bit of trouble. And then we come to the Income Tax Audit Manual, Chapter 28. So this is what the revenue officer at the CRA would look at. They would look at Chapter 28 and the penalty section and guidelines on how to apply the penalties to you. And so they'd say by not keeping proper books and records, the taxpayer has demonstrated a degree of neglect. And so it would be their job to apply these penalties that we talked about before, which is like $1,000 to $25,000 based on your situation. So, yeah.
And again, I think we've mentioned this before in other videos, but I would like to reiterate it. Like, negligence is not an excuse, as you can see. Like, even like just because you're not a bookkeeper, a professional bookkeeper, doesn't mean like, oh, but like I don't want to do that or I didn't know how to do that. That's not an excuse with the CRA.
Yeah, part of the problem that we see with a lot of business owners that are in non-compliance is they say, well, I didn't know that about owning a business. But when you opened your business, it's your responsibility to learn this. We're not being shills for the government here. We're just letting you know that that's how they see this situation. And when you're providing, your tax return, you're making a statement saying this is to a degree accurate, and this is how much money I received, and this is all my expenses, and this is how much you should tax me.
Yeah, I think a good example of this would be, let's say you buy a house, you're a first-time homeowner, you have to do some maintenance on the house, but you don't know exactly how, so maybe you hire like a gardener or something like that. Same thing with running a business. It's your first time, opening a business, you have to do your bookkeeping, you don't know exactly how, so you hire a bookkeeper. Like, it's not an excuse that you don't know how.
And one of the things, though, that we see quite a bit is when a business owner is losing money, and just frankly, nearly everyone loses money in the beginning.
Yeah.
Nearly everyone.
I think like 70 or 80% don't make money
it's
their first year.
A high number.
Yeah.
And what happens then is the business owner doesn't want to look at the books or the financials or the bank statement because it upsets them that they're losing money. That's the wrong way to go about doing this. So just, if you're in that situation right now, just say, okay, everyone goes through this. I need to deal with the situation. Move forward. And so with the US, it can be, you don't have such clear penalties for books and records. However, they do have these sort of situations here. So Section 7203, willful fail to file, return, supply information, or pay tax. Penalties for willful failure to keep records or supply information. So they can hit you with this penalty if you fail to pay any sort of taxes or file a return or keep any records. And it ranges from just a penalty to, if they manage to prove that it's willful, you're going to have like misdemeanors and very large fines. But again, it has to be willful. So you have to be actively trying to do the wrong thing. I'm not going to get into the definition of willful, but yeah. IRC Section 6662, imposition of accuracy-related penalty on underpayments. So penalty for underpayment due to negligence or disregard of the rules. So this is imposed when you just like underpay a tax return. So say, for example, you claim something on your tax return, it wasn't actually correct, and then now they're going to institute a penalty on the difference between what it was that you paid and what it was that you didn't pay. And it's generally about 20% of the underpayment, and that will need to be attributable to the negligence or disregard of the rules or regulations.
Also, guys, penalties and interest like given by the CRA or the IRS are not tax deductible. Like that, yes. You're just going to eat those costs.
Yeah, it's just something you have to pay. And also on those penalties, penalties can be a little easier to get out of, but interest you're generally not going to get out of it most of the time. Very special circumstances. We got this in another video, but special circumstances. IRC Section 6651, failure to file tax return or to pay tax. So penalties for failing to file a tax return or paid any taxes. And this is just the standard penalties that you see all the time. So the penalty for failing to file a return is about 5% due on each month the return is late, up to a maximum of 25%, and then the penalty for failing to pay the tax on the tax return is 0.5% or 0.5% each month until it's paid, up to a maximum of 25%. The one you want to watch out for, though, which we don't have here, is what would happen if you had bad bookkeeping and it affected your ability to remit your payroll taxes. And that's called a trust fund recovery penalty in the United States, and that's the 100% penalty. So if you do not remit, the $10,000 in payroll taxes, you're going to pay like a $10,000 penalty. So that's just not a nice one. And then we've got here Treasury Regulation Statute 1.6662-3, negligence or disregard of rules or regulations. So that's just a statute outlining some of the rules and why they would apply to this situation. So you can have a read of these if you're interested in what you may face just for having, bad books and records, which lead you to having situations where you're not filing the correct things, or you're not
filing at all.
You're not filing at all, or you're willfully doing the wrong thing, or you're remitting the wrong amounts, etc.
Okay, so some negative consequences of not having bookkeeping. So obviously, not just the government consequences, right?
Yeah,
there's other consequences to it.
So the government one, a lot of people put that out of mind.
Yeah.
But this one will impact you directly. So Yeah.
First is the loss of financial control. So you'll have difficulty in tracking your income and expenses, potential again for cash flow issues and not being able to meet your obligations. And honestly, we see this a lot.
This is probably that's probably the most common one.
Yeah, like they didn't do it. What happened is like, oh, like I'm a month behind, then I'm 3 months behind, then I'm a year behind, and it just gets away from them.
And this is one you really need to be careful of if you're not selling a service, but you're selling like a physical item. So you've got inventory and you've got costs associated with that item. And then, for example, if you end up having 15 different items that are being sold, and they each have different costs associated with them, and you're not tracking that correctly, you don't even know if the item that you're selling is profitable or not.
Yeah.
And we see this a lot. And when you get down to it and finish off the work, it's very eye-opening for the business owner.
Yeah. Next is inaccurate financial reporting, so misleading financial statements, risk of audits and legal issues. So this comes with, let's say, you want an investor.
Or you're going for a loan at a bank.
Well,
Yeah.
that's securing financing.
Oh.
But yeah, but like it does add, risk of audit and legal issues. So let's say you are a franchisee, you have a franchise agreement, you promised, in your franchise agreement to send them a P&L every quarter, and you've not been doing that because you've been behind, or maybe the P&L is way far off from the truth.
But that's what I
Yeah.
mean when I say issues with the bank. So
Yeah.
if you're getting loans and you're providing financials which are totally inaccurate, which we've seen
Happen.
people
Yeah.
do before, and we have to let people like that know that we can't help them. But that can get you into a lot of hot water. I mean, that's a crime.
Yeah. Which leads to obviously difficulty in securing financing, so challenges in obtaining loans and investments, and also the lack of trust from stakeholders. So if you own a company jointly with your family, whoever is supposed to be in charge of the books and is not doing a great job, obviously the other people's going to get mad at them.
Yeah. Additional negative outcomes, increased vulnerability to fraud. I mean, we've touched on that, but it's a lot more common than people think.
Yeah. And then you'll have a difficulty in selling your business when you actually want to sell. There could be payroll issues as well. So not just not remitting the taxes to the government, but if you're not being compliant with payroll, your employees that you fired could come back and sue you.
Not only that, if you're remitting the wrong amounts to the government and you've got a whole bunch of employees, and we've seen this one too, and then it comes to when they're filing their T1s and everything is wrong and they get audited, they are coming to get you.
Yeah.
All of your employees will be mad.
Yeah, and then
Yeah, it really does
obviously-
strain the relationship.
Yeah, it does strain your relationship, not just like with your employees, but if you're running a business with your spouse, which we've seen happen.
Not with us.
Not with
we
us.
actually
but-
get along pretty well.
but
which
we've
is,
seen it with other people. Even if the spouse is not involved in the business, if the business is not doing well, then
we've seen
it's
that
straight.
a
Yeah,
fair bit
we've
as
seen
well.
it strain relationships as well. Okay, so how to maintain proper bookkeeping. So number one is just please have a system, like have a bookkeeping system.
We don't advise having a manual system, but
If you
please, that's
choose
better.
to,
That's better
yeah.
than nothing.
Yeah. So, you can have an electronic bookkeeping system. So electronic doesn't even mean that you need the software. It could be, a Google sheet or an Excel sheet or something like that.
Yeah, I mean, there's free alternatives as well. I mean, there's Wave accounting, which is we don't deal with that, but there's Wave accounting, and what's another one? FreshBooks, which is relatively low cost. But if you're having a business and you can't afford the cost of an accounting software that's so cheap, I mean, these are basic entry-level softwares, even QuickBooks and Xero. If you can't afford those, then perhaps you're going to really need to rethink what it is that you're doing with your business.
Yeah. Next is to regularly update financial records. Again, it happens where it's just a month behind, then 3 months behind, then it's a year behind. So you have to just dedicate time to bookkeeping.
Yeah.
So it does take time. You have to commit to like a schedule. This is commit to a routine with your bookkeeping so that you don't fall so far behind that it's so hard to catch up.
Yeah, and the rule should be just say when your statements come out on, for example, 15th of the month, that weekend following the 15th is always the weekend that you do it,
Yeah.
no matter what.
Yeah. Next is, hire a professional bookkeeper. So if you can't commit, you don't have the time, then take it off your plate. Have someone else do it for you. And with a professional, you know that your bookkeeping is done right. And I cannot stress this enough. Please choose the right bookkeeper. Like, don't just go
Yeah.
for whoever's cheapest that you find on Upwork. I've seen it.
We've seen this quite a bit where people think, oh, bookkeeping's so easy, I could do it. Well, probably not. But at the end of the day, there's a lot of business owners where they'll hire a bookkeeper and that bookkeeper will be terrible, and the cost to repair the bad work that's been done is very, very expensive, because not only do you have to catch up an entire year's worth of bookkeeping instead of paying it monthly, you now have to pay probably double to undo all the terrible work and then redo it again.
Yeah. And also, I think, I don't know if most business owners realize this, but if you do hire a bookkeeper and you think, oh yeah, like I'll hire a bookkeeper from, Asia or something like that because it costs cheaper, it might cost you cheaper, true, but will they be able to file your tax returns for you, like your HST return? Because
No.
non-residents can't really have...
They can't have e-file.
Yeah, they can't have e-file. They can't have the CRA represent a client account. So take those into consideration. It's not just like getting the books done. It's actually filing the tax returns as well.
And staying in compliance.
Yeah.
But when it comes down to this, just think of it as a cost-benefit analysis for yourself when hiring a bookkeeper. Say you spend 20 hours a week or 20 hours a month doing this, or 10 hours a week, so whatever. Just call it 10 hours a week, right?
Mm-hmm.
And you value your time. Just say you value your time at $50 an hour. You've spent $500 of your own time wasting doing this per week when you could have just paid someone else to do it for probably less money, and then you could have gone out and been earning that $500, right? So think of it as that's the spread between the two. Don't waste your own time doing something that you probably won't enjoy doing, and someone else can deal with it at a more higher level.
Yeah. Next is that you should stay compliant with tax laws. So you need to understand your tax obligations and schedules. When do you need to file your sales tax? Is it quarterly, monthly, annually? And you need to keep up with changes in tax laws. So one good example that I can think of is, this is a US example, but the Tax Cuts and Jobs Act. So that completely changed the game in terms of tax deductions, and now it's like sunsetting.
Yeah, so will Congress keep it going, or will they not keep it going? But this is the problem with US taxes, is every time the administration changes, the tax code changes. So it's super fun and super difficult for everybody.
Yeah. Also, you need to know when you hit your limits. So you need someone who understands what the limits are in the first place, and keep track of that if you've hit that limit. For example,
sales tax and nexus.
Sales tax and nexus.
And that goes for Canada as well. So you've got your provincial sales tax.
Yeah. So if you're in Ontario, you're selling to BC, when do you need to register for BC PST? You need to keep on top of all of those things.
But that's what we come back to saying, hire a professional, because usually they'll be keeping an eye on this for you.
Okay. So finally, just to recap what we've talked about, number one is that bookkeeping is the backbone of any business. Number two is just choose a bookkeeping software that is online. Again, make your life easier. Number 3 is get started on the right foot. So if you don't know how to set up an accounting system, you can at least pay someone to set one up for you.
Sometimes it's very difficult to do these things, and then when you start off wrong, you're going to end up, like we said, garbage in, garbage out. You're going to end up with the wrong
Set of financials.
set up financials. Like, you don't need inventory in a services business.
Yeah. And lastly, we'll have links down below with all the, penalties and stuff like that we mentioned. So don't worry about that. You guys can have a read if you want to.
Yeah, and if you have any ideas for, videos you want to see, like a comparison of different software, or, how to deal with a particular situation, please let us know in the comments, and we'll be happy to, think about it and probably make something for you.
So once again, this is Ariel
And Jason
from Fix My Books. Have a great day.